An asset is a resource with economic value that a person, business, or government owns or manages to intend to profit from it in the future. Despite being a safe asset, cash is terrible to hold due to inflation. The rate at which the value of a currency decreases and its purchasing power is known as inflation. People are looking for ways to protect their hard-earned money because inflation rates have steadily increased in recent years as a result of the COVID outbreak and the ongoing conflict in Ukraine. Therefore, we'll be looking at 10 assets that are always preferable to cash in this practical wisdom video. But before we get deeper, if you are new to this channel, hit the subscribe button and the notification bell so you don't miss any of our videos. So, without further ado, let's get started. Number 1. Land. The land is a categorically and objectively appreciating asset for two simple reasons. The amount of land that is available and suitable for habitation is limited, and the world's population is increasing exponentially every year. Since it cannot be produced, the land is a very desirable commodity. As a result, according to the most fundamental economic principle of supply and demand, the land will inevitably appreciate as demand for the limited resource rises. It is now a matter of how much land will increase in value rather than if it will. The benefits of diversification it offers to investment portfolios at the moment are among the most compelling arguments for investing in land. Due to the steady returns and low correlation to other asset classes, investors have started to diversify their portfolios more to protect themselves from market risks. Bill Gates is a good example. According to the Land Report, Bill Gates surpassed all other private farmland owners in America in January 2021, with a staggering 242,000 acres spread across 11 states. This says a lot about land as an asset coming from one of the richest people in the world. Number 2. Stocks. Stocks are financial instruments that represent a portion of ownership in a business with the expectation that it will prosper and grow. Because the majority of company portfolios are heavily weighted in equities, which tend to be more elastic, stocks remain resilient during periods of inflation as well as significant conflicts or disasters. Investing in the stock market is a long-term endeavor. To ensure that the collapse of one industry does not completely devastate your portfolio, it is wise to diversify your investment portfolio by making investments in various industries. Investments in index funds which follow a benchmark index like the S&P 500 or the Nasdaq 100 are the alternative. Your money is distributed among all of the companies that make up the index when you invest in an index fund, giving you a more diverse portfolio than you would have if you had purchased individual stocks. One of the best ways for beginners to start investing in the stock market is to deposit money into an online investment account, which can then be used to invest in stock shares or stock mutual funds from all over the world. Number 3. Real estate. Real estate remains one of the best small business and personal prospects available despite rising interest rates. In actuality, real estate is a great asset and investment. A secure investment strategy is to buy, own, care for, and eventually trade up investment plan property. Like land, real estate always increases in value over time. Because real estate is a tangible asset that can be passed down from one generation to the next, owning property offers generational wealth in addition to dependable income from monthly rental payments. Real estate can be used for industrial, commercial, residential, or special purposes such as the construction of social amenities. Number 4. Cryptocurrency. Digital currencies known as cryptocurrencies are sweeping the globe as more and more people adopt this new way of life. The most popular cryptocurrency is Bitcoin, which as of mid-May 2022 is expected to be worth about $30,000 per coin. The limited supply and decentralized nature of Bitcoin are making it more in demand. Altcoins or currencies other than Bitcoin such as Dogecoin, Ethereum, and Polkadot, to name a few, are other cryptocurrencies worth investing in. As evidenced by US President Joe Biden's signing of an executive order to study the environmental impact of mining digital currencies and establish regulations to limit their use by criminals, terrorists, and money launderers, digital currencies are gradually being embraced and accepted by governments. Additionally, Biden urged the government to look into a plan to develop its digital currency. A government-backed digital coin like crypto would almost certainly use a ledger and digital wallets. While a digital dollar would not be as volatile as Bitcoin, the mechanics of using it would be similar. Number 5. Art. Have you ever questioned why the wealthy purchase art? Although the majority do, it's not because they like the product. According to the Wall Street Journal, prices for contemporary art have outperformed the S&P by 174% from 1995 to 2020, making the art market one of the hottest markets on earth. It also exhibits very little correlation to any significant asset class, making it an effective tool for portfolio diversification. Additionally, Deloitte forecasts that by 2026, the total wealth held in the art will increase to $900 billion from its current estimated value of $1.7 trillion. The art market's enormous entry barrier is its only drawback. Like you, I don't have millions of dollars to spend on a painting. The top-of-the-line art market is now accessible to investors like me and you, thanks to today's sponsor. Masterworks has established itself as the leading platform for art investments, combining technology and finance to give anyone the chance to purchase iconic works of art by Banksy, Picasso, and Basquiat that are valued at several $million. You can purchase shares of Masterworks that correspond to an investment in art. Masterworks has sold 3 paintings since 2020, each of which generated a net IRR to investors of over 30%, and their fresh inventory typically sells out within hours. Your capital is at risk, just like with all investments. Your portfolio's value could increase or decrease, and you might not get back as much as you invested. Number 6. NFTs. NFTs are a highly debatable and contentious asset class. Even though few people truly understand their worth, value, or even use, some of these NFTs have been sold for thousands or even millions of dollars. In light, because likely encountering many of them in the future, I believe it is worthwhile to take a look at them. According to Wikipedia, a non-fungible token is a type of financial security made up of digital data stored on a blockchain, a type of distributed ledger. Non-fungible tokens, or NFTs, are becoming more and more popular as lucrative investment options. Small investors, crafters, and artists are making millions of dollars thanks to the exorbitant prices at which many artistic and creative items are currently being sold. From a starting bid of $2 million, some of the incredible works of art are selling for $11.75 million. You may be familiar with Bored Ape Yacht Club, Doodles, and CryptoPunks as some of the most well-known NFT collections. This opens up the possibility of owning something on the internet, which can be a game changer in terms of copyrights and royalties, and it doesn't just apply to artists. It's crucial to remember that the law of supply and demand applies to NFTs. As a result, whether or not people are willing to pay determines supply. The most crucial thing to understand about NFTs is that they can reliably and permanently record the ownership of any asset. It was previously impossible to make them highly tradable. One can own permanent land or art to be used in the emerging digital world, such as the metaverse. Number 7. Precious metals. Famous metals like gold, silver, and platinum are examples of precious metals. The majority of currencies were backed by these precious metals before the current global fiat monetary system. The gold standard, which allowed people to instantly exchange their money for gold, was followed by the entire world for many centuries. In a nation that followed the gold standard, gold has a set price and was purchased and sold at that rate. The value of the money was set by that predetermined price. Representative money was the name of this system, which was abandoned after the Great Depression. These metals are priceless though, because only a small amount of them are produced each year. Their worth is based on their rarity. The most sophisticated method of investing in precious metals is to purchase the metals themselves. Gold, silver, platinum, and palladium are sold as bars and coins by coin dealers all over the world. Their costs do, however, fluctuate in response to market supply and demand. An alternative strategy for investing in the precious metals markets is to buy shares of companies engaged in the production and mining of actual metals. These stocks tend to rise along with rising metal prices and fall along with falling metal prices. However, in addition to the price of the metals, those who invest in mining stocks also assume other risks. Number 8. Vintage cars. The hobby of collecting vintage cars is gaining popularity. Can you picture using your old muscle car, German coupe, or British roadster as a weekend getaway vehicle that also makes you some money? Several other investment categories have outperformed antique cars, including collectibles, art, furniture, and jewelry. If you have the right car and the right buyer, vintage cars are still a fantastic investment. Number 9. Luxury pieces. Luxury and rare items make excellent investments, from pricey wines and spirits to fine jewelry and watches. However, to choose items that will give you a good return, these investments necessitate a significant amount of knowledge. Most celebrities are probably familiar to you thanks to their flashy Rolex, Patek, and Hermes Birkin accessories. These priceless items are in fact a part of their varied portfolios. When compared to the S&P 500's return of 8% per year, some items, like the Audemars Piguet watch, fetch nearly 10% per year. Number 10. Bonds. Bonds are an excellent source of income. A promissory note is all that makes up a bond. You can use it to lend money to organizations and national, state, as well as local governments. In the face of uncertainty, bonds provide investors with much-needed stability. Bonds are frequently used to balance a portfolio because they are generally safe financial investments, especially when compared to other assets' volatility like equities. Bonds provide opportunities for long-term investments with fixed interest rates. Since the payments on bonds are typically fixed and can offer investors a steady cash flow, bonds are referred to as fixed income investments. Investors prefer bonds because of their profit potential. The global bond market is larger than the global stock market, making it more profitable. The assets I just listed are better than cash, but which one or one will work best for your portfolio will depend on your research, personal preference, and the advice of your financial advisor. Investing in assets that can generate income or cash flow is a tactic that many prosperous people employ. Additionally, one of the best ways to create a financial safety net is to diversify your sources of income. And that's it for this video. Before you go, don't forget to like, comment, subscribe, and click the notification bell for more videos like this. Thanks for watching and see you next time.